Hello everyone and welcome to Fun with Fitzy. Today's video is Chapter 3, Video 5. So this is the last video in our Chapter 3 videos. And basically we're just summing it all up and looking at an adjusted trial balance and financial statements at the end of our adjustments. And also this is a really good thing I think you should write down. We'll do an activity around this in class about the type of adjustment. So this is just like a recap. So if we have prepaid expenses, remember we had prepaids, accruals, and estimates. Well, for prepaid expenses, we talked about these relationships. So there's an asset-expense relationship. And if you do not do the adjustment, assets will be overstated and expenses will be understated. And here's the adjusting entry. So this is just a whole bunch of them. Again, for unearned revenue, which is a prepayment, it has a liability and revenue relationship. If you don't do the adjustment, liabilities will be overstated and revenues will be understated. And for the accrual, so for accrued revenue and accrued expenses, for the revenues asset and revenue relationship, and there's an expense and liability relationship for the expenses, and all of them are understated if you don't do the adjustment. And here again, of course, is the adjusting entry. And finally, for the amortization, there is an expense and contra asset, which is accumulated amortization, which is coming down. So accumulated amortization as a credit over here is coming down onto this line, so just ignore that. But if you do not do this, expenses will be understated and your assets will be overstated. So really important to do these adjustments at the year end. So an adjusted trial balance, let's take a peek at it. It is prepared after the adjusting entries have been journalized and posted, which means you've completed the adjustments, and basically shows the balances of all the accounts at the end of the accounting period after they've been updated with the adjustments. So shows the effects of all the financial events that have occurred during the period. And it proves that your debits equal your credits. So make sure your ledger is still in balance after you've done your adjustments. So it's called an adjusted trial balance. So the trial balance, the normal trial balance is done just any time throughout the period, and adjusted trial balance is done after adjustments. And there's one more trial balance called a post-closing trial balance, which you do after your closing entries. Now, financial statements can be prepared directly from the adjusted trial balance. You have all the information you need there to do it. So here's a trial balance before the adjustments and then after the adjustment. So for example here, there was no accounts receivable, but after the adjustments, now there's a debit of $200. So basically you've recorded a revenue that you had earned that was not recorded in the period. And so on and so forth. After you've counted your supplies, you look like you used 1,500 up and now there's 1,000 left, so on and so forth. So here's your adjusted trial balance. Basically, an adjusted trial balance is a trial balance, which is all of your accounts listed in ledger order, showing the debits and credits for the period and the totals, and it proves the equality of the ledger, shows that the accounting fundamental equation still is in balance. So preparing financial statements directly from the adjusted trial balance, and I'm going to show you how to do that. So the income statement is prepared from the revenue and expense account. So back to the trial balance here, your revenue and expense accounts are right here. So this is a really simple income statement. And the statement of owner's equity, we talked about this all in grade 11. It's derived from the owner's capital and drawings and the net income shown in the income statement. So you need to do the income statement first. And then, of course, the balance sheet is prepared from the assets and liabilities and capital, the ending capital reported on the statement of owner's equity. So in order to do your balance sheet, you need to have done the other two. Okay, so let's take a peek. So here we have our adjusted trial balance. And here's our income statement. So you can see clearly that our revenue is here, and we've done a subtotal of our expenses to make our total expenses here $7,758, and revenue minus expenses equals our net income. Now don't be confused. This looks like a debit and a credit column, but it's not. Remember, as you prepare financial statements, you move to the left every time you need to do a subtotal. And here's our statement of owner's equity. So a little bit different from the version we did in grade 11, but pretty similar. So on October 1st, we get our beginning capital, which was 0 if you actually go back and look at the other trial balance. But the owner invested $10,000 throughout this period. So we're going to add investments and net income. And then we're going to subtract drawings. So it's still beginning capital plus net income less drawings equals our ending capital, which is right here. So this 12,342, our ending capital, is going to go on our balance sheet. And that net income is from our income statement, goes on the statement of owner's equity. So let's look at the balance sheet. So here are our assets. And this is not a classified balance sheet because it doesn't have our assets and everything classified. It just has all of our assets, doesn't have current assets and fixed assets split out. But regardless, we're going to subtotal here. Here's what we talked about when we did our adjustment for depreciation or amortization. Here we have the cost of our office equipment less our accumulated amortization. And this number here, the 4,917, is the net book value. And if you add up this whole column, our total assets is 21,867. And of course, our liabilities in red here and everything else is listed here. And our ending capital that we got on our statement of owner's equity, don't be careful not to take this $10,000 because it's not our updated capital. And let's just do a quick review of our accounting cycle. Analyze transactions is the first step. Journalize into the general journal. Post to the ledger, that means transfer the journal entries to the proper ledger accounts. And don't forget that includes cross-referencing. Prepare a trial balance. Journalize and post adjusting entries. Prepare an adjusted trial balance. And then you can prepare your financial statements. And of course, after the financial statement preparation, we got to do our closing entries, which is coming next chapter. So stay tuned.